Okay, well, let's just walk down each of these journal entries. So we got the city of Pfeiffer with the general fund and enterprise fund. The general fund has two activities, education and parks and rec. For convenience, assume that the general fund holds $123,000 in cash, a new school building. They use straight line. The building has a 20-year life, no value, salvage value. The enterprise, 62,000 cash, new auditorium, 30-year life, no salvage. The enterprise fund does one thing, the auditorium. All right, so letter A. They decide to build a municipal park and transfer $70,000 into a capital projects fund and immediately expends $20,000 for a piece of land. The creation of this fund and its transfer were made at the highest level of authority. So what they're trying to show here is, okay, we're doing the government-wide financials for 38. Excuse me, are we doing that for 37 or 38? 37 is government-wide, 38 is fund financials. So here we go, yes, fund financials. So we're moving it from the general fund to capital projects. So this is kind of like when it's a financing use, other financing use is similar to what you would consider like an expense, but it's a transfer, so it's an out, a cash credit. Capital projects then, of course, has to have a cash in and then other financing sources transfer in. And then immediately they bought the land. So there's no capitalization here, it's an expenditure. Questions on letter A? Letter B, it says they borrow $110,000 on a long-term bond. Well, it's the capital projects that's going to be doing the building of this thing. So they received cash, and then it's an other financing source, like a revenue, other financing source. Okay, letter C. They assess property taxes. It's enforceable, $600,000 total. Of this amount, $510 will be collected during 17, $510. So that is why we debit the cash for $510, and another is going to be received, so a property tax receivable in 18 for $90. The remainder is expected about halfway through 2018. So we show our debit and our credit. Question on letter C. Letter it, when generally speaking, when it's beyond 6 months, then it's almost it's too far out that they because we're in the fund financials. It's really unable to be used for current resources, so it's too far out. Good question. All right, letter D. Construct a building for 80,000 cash. It is put into service on July 1st and it will last 10 years. All right, so again, this is the capital expenditure. We want to make a note on this one because we're going to have to do some depreciation, and I believe that's at the end of the problem. So we debit expenditure, credit cash. Letter E, we build a sidewalk for 10 grand and put it into service July 1st. Again, here's another one. So debit expenditure, credit cash. Letter F, we open the park and charge an entrance fee. Collections during the first year are 8,000, cash, revenue, general fund. Letter G, we buy a new parking debt for 200,000. We pay 20,000 in cash and we sign a long-term note for the rest. So there's a whole But this is the enterprise fund, so notice that we have a credit to the notes payable for 180. They paid 20,000 in cash. Again, this will affect us at the end for some depreciation. Letter H, they receive a $100,000 cash grant for lunches. Appropriate spending of these funds is viewed as an eligibility requirement. During the current year, 37,000 of this amount was properly spent. Okay, so we show all of it coming in the special revenue fund, all unearned fees, and then they said 37 was properly, or they did what they were supposed to do with it. Well, then they can expend that, and it hits expenditures, but then we also will take $37,000 out of unearned and put it into earned. Okay. Letter I, charge students in the school system a total fee of $6,000 for books. 90% is collected in 17, with the remainder expected to be collected in just the first few weeks. So all fees, they got 90% of it, 10% in a receivable. Letter J, they buy school supplies. 17,000 was used. So they said in letter J, they use the purchases method. So all of it gets put through expenditures and we credit cash. Letter K, we receive a painting by a local artist to be displayed in the local shop. It qualifies as a work of art. The officials have chosen not to capitalize it. It is viewed as inexhaustible because we're looking at fund financials. They're not capitalizing it. They're not depreciating it. So there's no entry. Letter L, they transfer 20,000 cash from the general fund to the enterprise fund. So again, out of general, other financing use, into enterprise debit cash, and then a credit as other financing source. Sources are revenues, uses are like an expense, a debit. Letter M, ordered a school bus. Nothing different here. Encumbrance and encumbrance outstanding. N, now we receive that school bus for 102. So we're going to remove it. So we reverse what we did in M, and then we debit expenditure and credit cash for the actual. We'll also need to remember this when there's some depreciation. Pay salaries of 240,000 to school teachers. In addition, and we'll pay 30,000 during the first 2 weeks of 18. Vacations worth 23,000 were also earned, but will not be taken until July. So when you add up the two, the salaries and the what's going to get paid into 2018, that 30, there's our 270,000 of expenditures. 240,000 was paid in cash, 30,000 as a payable. Not until July of 2018, so that last part, we will not record that. Correct. Now, letter P is a little different. Letter P, it reads, we paid salaries of 42,000 to the auditorium, and then there's this 3,000 of vacation. But this is the enterprise fund. So here we'll record all the salaries, we'll record the vacations. Notice here, expenses. We paid the cash, and we have some salary payable and vacation payable. So it's interesting to see how the difference between O and P. Q, they charge customers for rental of the Civic Auditorium, 110,000 in cash, the rest in April. Again, it's enterprise fund, so we're going to record it all. Cash, in fact, we would have with the general fund because it's in April, but cash, rent receivable, and then all of it going into, rent receivable, and all of this going into rent revenue. Letter R, there's some maintenance. So general fund, expenditure, credit cash. S pays $14,000 on the bond in B on the last day of 17, 5,000 principal and interest. Because this is in the enterprise fund, we'll record it as an expense interest. Excuse me, this is S right here, expenditures, which is interesting here. It's a general fund. So all expenditure for interest, all to the expenditures for bonds payable. That just seems goofy, but that's how it works in fund financials, and a credit to cash. Debit to expenditures. And they just know you could have done expenditures all for 14,000, but what they're trying to show is how much of that expenditure is for interest, how much of that expenditure is for a bond payable. Letter T, we accrue interest of 13,000 on the note in G. And if you look in G, that was that parking deck. So the enterprise fund, so we accrue this interest expense and an interest payable. And then that takes care of our journal entries. Letter U, assume that a museum that operates within the city is a component unit. All right. The museum reports to its city officials that it had 42,000 of direct expenses, 50,000 in revenues. The only asset that it had was 24,000 building, net of depreciation and a long-term liability. And no journal entry there, information. So now if you look, we've got one, here, this first one, this general fund entry, that's not a depreciation entry, but it's an adjustment, an HAE. That relates to, help me out here, I gotta look, where is it? J is it, that's exactly right. So we put 5,000 into an asset and we put the 5,000 as a credit into the fund balance for the portion that's not been used. And then these last journal entries here, I think it's just two of them here on depreciation, one for the auditorium and then another one for the parking deck. Macy, did I answer your question or have we addressed your question? What was your question? Yeah, right here. Oh, okay. So where is the journal entry that we did the unearned? Right here. So there was a total of, I think that's the only one that was unearned, correct? Do they have a beginning balance? Yes. Yeah. It is actually, that's what it is, because it is, it won't be earned because these are fund financials. This is letter C. Let me look at this a minute. I want to make sure. Yeah, and it's not expected about, the remainder is expected about halfway through. So it's kind of confusing. Let me explain that. So it's, again, if they would have given you, it would have been better if they would have given you a specific date of when we're going to receive this. And because it's kind of elusive that we don't know when it's going to be, we can't record that as revenue. So it's going to be recorded as unearned revenue, and then when we receive it, we'll actually take it into revenue. It's all about the timing. So that's it. That's hard to see, but that is where it sits. Yep. Yep. Yeah. So what we're looking at there is the fund balance here is this, you know where this 5,000 is coming from. This unassigned is essentially everything else. So you know what your total liabilities are, you know what is not spended. This is the unassigned. Everything's going to sit in there unless you've got something committed. Um, it's not the probably the most scientific answer, but it's basically the balance. Yep, that's exactly right. Yep, yep, yep. You will not need to do one of these on your exam, the balance sheet. Um, and not to diminish this, but two things. One, first of all, this is not a governmental course. All right, this is exposing you to governmental and non-for-profit. But this next point, it's very true, is you're going to have software that's going to be moving it from, one from one fund to the next, or it's going from general fund to special. You would have those columns put together for you. So I don't want to diminish the value of these statements here, the statement of revenues, expenditures, and changes in fund balance, but more so here than even your normal financial accounting, you're not going to do this by hand or manually. Never, never, ever. So I don't want to diminish that, but these, you would have software that would, you would click which fund it's coming from and which fund it's going to. And um, so anyway, Macy, any other questions for the enterprise fund you're talking? Oh, so again, this will be your balance, but this you have the 582, right? That's your building. Um, Invested in capital assets. Hold on, I gotta think here a minute. We have cash. I'm gonna have to get back to it. I can't see it right off the top of my head. Um, I'm looking through the journal entries to see if there's something I'm missing. Because which journal entry was it that we built it? Yeah. Where did, say it again. Oh, yes, 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 yes. I'm off by 13 and I can't, hold on. Oh, here it is. 582, which would be the 775, that's all of this, okay? Less your debt of 180, less the payable of interest that goes along with it. So if you take 775 minus your 180 of debt minus 13,000 of accrued interest, that's all sitting in capital assets. Does that make sense? The rest is going to be, this is the balance, 142. So again, you take right up here, all your fixed assets, if you will, your capital assets, 775, minus all the debt that relates to it, 180, less also the debt of interest payable that goes along with it. That's your 582. All right. Okay, that was 38. Should we look at 37? $37, so we'll just kind of walk through these since we've read them once already. Letter A is the, that decide to build a municipal park and they do some transfer. So what's important is it's going from one governmental entity to another governmental entity. So the transfer within those governmental activities is not recorded. But there was a purchase that, of course, has to get recorded because there's an outflow of cash. Letter B, we borrow some money. So again, because it's government-wide, we're going to record the debt. Letter C, they assess some property taxes. And in this case, we show all the property taxes. and dump it all into receivables. So this one, they're looking at a much bigger picture, not just the next 6 months. Construct a building now again with $80,000 of payment of cash. Again, it's still all in the governmental activities. Letter E, they bought and paid for a sidewalk. F, they received some fees, right, for attending the park or the pool, whatever it was, park. Here they, in letter G, they buy a new parking deck, capitalize it, and record the payment of cash and the debt. Letter H, they receive a $100,000 grant. Very similar to fund financials, cash unearned revenue. Here, though, we use the word expense, and we take it out of unearned and put it into revenue. I, they charged for some books, I believe it was, revenue and how much they got in cash and receivable. Letter J, they bought some school supplies. So they right away debit supplies, credit, cash, and then in here, because we're looking at government wide, we put it all into expense and we reduce the supplies account. So we won't have that adjustment here. It's going to show 5,000 already. Letter K, we debit the expense, we credit the revenue. Letter L, we transfer. The reason this has to be recorded is because unlike letter A, where there's going between two governmental activities, we're going from a governmental activity to a business type activity. So that is going from one pocket to another. That needs to be recorded. Letter M, we don't do encumbrance accounting with government-wide, so no entry. Letter N, we just finally record it when we get it. Debit bus, credit cash for the amount. Letter O, here we expense the salaries, we expense the vacations, credit cash, credit salary payable and vacation payable. P, very much the same thing, just notice how O and P are much more similar this time than they were in the fund financials. Q, we have some activity going on with a civic auditorium where we charge some customers, 130 grand, of which we got 110 in cash. Same type of entry again, some maintenance, except we use the word expense instead of expenditure. This time in letter S, we actually call it a bond and we don't say expenditure, bonds payable. We do still have expenses, but reduction of the bond. Here we're accruing that interest payable. And then in this case, we show our depreciation. So we don't have that adjustment for the 5 grand for the supplies like we did in the last one, but here we show the expense for depreciation on the school building, for the $80,000 building in Parks and Rec, the $600,000 civic auditorium, the governmental activity for the education, the school bus, and the parking deck. Questions on those journal entries? Correct. Correct. Yep. Enterprise is the only one that we concern ourselves about because it's like in this case, like business type. Right. Yep. And government wide, it doesn't matter which fund it is. We go through the calculation of it and record it. Yep. Anybody else? I'll tell you, 17, 16, 17, and 18 are kind of a doozy, because it's so, and I think you would agree, it's a doozy because it is so not what you are used to. This is something you haven't done at USF, really. You know, it's a very, 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 if it's even, it's a very specialized, and there are schools that actually offer just a governmental accounting course. And of course, it's for those that really want to go into governmental accounting. Um, I think after you look over the journal entries again and you look at it, then you will get to a point where you say, this isn't probably too bizarre. But the first time around, though, the first couple times around, it is. It's confusing, it's different, but you'll finally start to say, oh yeah, this is really not a whole lot different. I just got to remember the different funds, of course, and and what makes it more difficult again is keeping the separation between government wide and fund financial, and it gets it just gets confusing. But you'll start to get to the point of saying, oh, this isn't so terribly different. If I can get beyond the word expenditure and I can get beyond the idea that this is fund financial, so I don't record this, but yet for government wide I do, and it's just all those little idiosyncrasies, but um, very good. Well, that really takes care of chapter 17, folks. The next one that we're going to get into is chapter 18, and then we're starting to look at non-for-profit. And I kind of bundle them all together because they're different, but yet they're very similar. They're much more similar than they are looking at our traditional accounting. So, you guys keeping up with everything? Yeah. I'm going to stop sharing my screen here so you can. How about you, Macy? Are you still keeping up? Probably have more time. Yeah. I'm trying to think if I've heard any other news. Trying to think. What did they do? What did they do? I'm surprised that they've already caught that. Yeah. Um, I think it's interesting how many, and I suppose it's because you have to apply for it. So, and I think these big, big, big businesses have people that are watching out for it and are doing it, or have companies that these banks are going after their companies saying you need to apply for this. But did you see how many companies are returning their money? Oh, really? Because of backlash of saying you guys are huge, you've got this kind of cash balances, and you're taking the funds, and yet it was really designed for the very small mom and pop shops that really, really need the money. And I'm not saying that these big companies don't need the money, but um, they got enough backlash, enough support from people that they must have felt guilty enough to return it. I mean, um, hmm. Oh, really? That's so too bad. What is your feelings on these states reopening? I hope it's not too early. Yeah. No. No. I know. No. No. And I know several people that are, well, like for instance, we have a cabin at Okoboji, and the people right next door are from Sioux Falls. They're not old, they're elderly, or older, I should say it that way. Um, I forget what he had over the winter. Fluid in his lungs and all this was kind of quite serious. Um, they're staying there. They do not. They're staying at Okoboji. They've been there for like 5 weeks already. They're just so afraid to be in Sioux Falls, because it's such a hot spot here. But I don't I don't think people understand. So I don't know. But just real quick, I think the last time I was with you guys, I told you that my wife was going in and whatnot. Did you see it? There was a tweet that Avera put out. It was highest, the highest number of babies delivered in that one 24-hour time frame. Oh, that was kind of funny. So anyway, well, I will let you two go. I know it's only Thursday, but I'll tell you now. Have a nice weekend, and I'll shoot you what we'll look at in chapter 18. So that's right. I forgot. Yes. Just no. That's what was. It was out there, and I have it on my. What are you doing to stay busy? Yes. Start with you, Amanda. You are. Yes. Yes, you will. Oh my gosh. Good for you. Good for you. Good for you. Wow. My daughter, who's a freshman in college, well, of course she's home now, and she just before I got on here, she said she was going to go for a 5 mile run, and I said, oh, I would have joined her, but I had this with you guys, so not. So, oh, that's awesome. Good for you. Cool. Macy, how about you? Good. So, did you take the advanced Excel course? Good for you. Both of you? Yes. Was it in your program already required? Okay, okay. I always kind of forget when that kicked in that was required. Awesome. That's something you will never ever regret that you did. So, Macy, you had asked a question about that writing sample. I just ran across that yesterday with another student. So, what these companies I think they're looking for is, and I would tell it with you both, not you have nothing to worry about. I think they want to see that people can write. They're not looking for a dissertation. What they want to see is that you can write succinctly in the same tense all the way through, or that you can write. Not you don't have to publish, but just that you can write a full sentence, punctuation, simple stuff. But and I think your advantage, not that I'm going to say that other schools can't do this, but you went to a liberal arts school, so you took a lot of reading and writing kind of courses, and I read your stuff. I know it seems, because this student was the same thing. She was quite concerned, like, oh my gosh, what are they looking for? And I'm like, what you're doing is what they're looking for. So, well, oh, good for you. Good. Oh, are you? Okay. So when do I get to see that, do you think? Okay. Well, you two, I will record your extra credit. So, hey, I will see you next Tuesday. Thanks for joining in.